My name is Joel SaLauror. I'm a prosperity coach, and my mission is to help at least 100,000 people become financially free. I'd like you to be one of them. So the title of this course is Creating Prosperity and Successfully Planning Your Business. So we're going to be talking a lot about how to go from startup phase to actually being a very successful business. We're going to be talking a lot about the growth of your company. So let me tell you a little bit about me first, and then we'll get into the actual agenda for today. So many of you know I'm a best-selling author. I wrote 2 books in the last 2 years, Mindful Money Management and The 9 Money Rules Millionaires Use. And we'll go through a lot of the concepts in those books today as well. Some of you may not know that I started my career as an actuary. And some of you may know accountants, but the difference between an accountant and an actuary is an actuary looks at his feet when he talks to you, an accountant looks at your feet when they talk to you. They say an actuary is an accountant with charisma, but I'm not the typical actuary. I have a lot of actuarial jokes. I won't spare you. I'll spare you the rest of them. But I did start my career as an actuary. And let me just go a little bit into my background here. I'll share my screen now. So first, I'm talking about my background, and then we're going to get into some awesome tips to shift your money mindset. We're going to be talking about what's your money personality type, because if you don't know who you are, it's going to be really tough to be successful in your business. And it's also important to know the money personality types of your employees. So we'll get into all that. We'll talk about where is my cash going, which is actually the rule number 7 in the 9 money rules. We'll play the budget game, and then we'll get into your business plan, how to plan as a startup, how to understand your strengths and weaknesses, the opportunities and threats for your business, how much to invest, what is paying yourself first. If there are any unexpected items in your business, what do you do with that? And how can you plan for the unexpected? We'll talk about business growth, the balance sheet, the profit and loss, business investments. We'll go through a scenario analysis, and then we'll open it up to questions. So I started talking to you about how I started my career as an actuary, but I had a dream. And my dream was to be a portfolio manager. And I know a lot of you have dreams. The question is, do you have faith in your dreams? Or are you doubting them? Hashtag doubt the doubt. Doubt your doubt. Don't have faith in your doubt, but have faith in your dreams. Believe in your dreams and desires. We'll get into beliefs in a second, which is actually rule number 1 of the 9 money rules. But let me talk to you a little bit more about my dream. So I'm an actuary working at, as you see here, New York Life Insurance Company. But I had a dream to be a portfolio manager. Well, what I'm teaching you today, I didn't know back then. So you're getting the benefit of 15 years of education that you'll fast forward and not have to go through those 15 years. You could actually go from a dream to achieving that dream in much less than 15 years, hopefully in less than a year. And this is actually what I teach my clients, how to achieve their dreams quickly. So I had this dream, but it took me 15 years because I had massive doubt. Everybody I talked to gave me doubt. And I actually did not have faith in the dream throughout that time. And so how do you deal with the doubt? You know, it's something that we talk about a lot when I go through coaching with my clients. So it did take me 15 years, but I got there and I became a portfolio manager at Citigroup. And I worked at Citigroup in 2008. I started in 2008 when some of you may know the stock market was not doing that great. It was actually down 40% that year in 2008. And financial stocks, that's the only stocks I was managing, were down 57%. Well, we managed to make money that year, and they gave me even more money to manage. As you see here on the slide, I grew it to $700 million in 2011 and made money each full year. I was managing money for Citigroup before they actually shut down our whole group, which gave me the kick in the butt to actually live my true dream, which was have my own hedge fund. And I was CEO and chief investment officer of my own hedge fund. And while I was at my hedge fund, a lot of things happened, but let me fast forward here to the next slide and talk about my startup story as a hedge fund manager. Because what happened was in 2012, I was laid off from Citi. And again, I had doubt. Am I supposed to really go for my dream, or do I get another job? And what happened was the universe gave me the path. I had a hard time finding a job, believe it or not. I had made money in 2008 and 9 and 10. And in 2011, the financial stocks were down 25%. And we were down just a little bit that year. And I had a hard time finding a job in 2012, and it hit me. Joel, you're supposed to start your own company. And I did. So I went out to different companies and said, I'm starting my own company. Will you give me money to manage? And I got 2 companies orally agreed to give me money. So I went ahead and I hired my accountant, I hired an auditor, I hired a lawyer, I hired a broker. I even moved into commercial real estate space on 54th and Madison. I felt like I'd arrived. Nice office, window, view of Madison Avenue. And it was December 17, 2012. And I call up those 2 companies and say, okay, I'm going to send you the documents. And they said to me, sorry, Joel, we're not investing with you. I don't know if you guys feel the pain that I was in those days, but I was, oh my God, what, are you kidding me? I hired all these people. I signed a year lease. What? And I could have given up, but I was this close to a 15-year dream. So what did I do? I acted as if I already had the money. I acted as if both companies had given me money. On January 1st, 2013, I hired the analyst I was going to hire. And we had morning calls talking about stocks every morning at 8:30. And we acted as if we already had the money. We went to conferences in January 2013 as if we had the money. And more, I did something really crazy. I put together a spreadsheet of companies we were invested in. And I calculated our profit and loss every day. And I screamed at my analyst as if we had lost money that day. Sean, what happened? We got to rejigger the portfolio. Or Sean, great job. Good day today. Keep it up. And we acted as if all of January 2013. Of course, I was taking action as well, going out and calling companies, meeting with companies. And I had a really good meeting on January 25th, 2013. And within 2 months, we had a signed written agreement that we had, that they were going to invest with us. And within 6 months, we were actually investing. And I truly believe to this day that acting as if we had the money got us the money. Now, visualization or visualizing is rule number 4 of the 9 money rules. I'm not going to go into in detail, but I was also visualizing. I actually put together a presentation that I used to try to raise money from investors. And on that presentation, I had my vision for my company 3-5 years out. I had the number of employees. I had all the boxes. I had the amount of money we were managing. I had my 2 employees that I currently had. And then I had the marketing person and all these other people that we were going to hire over the coming years. So visualizing in reality while you're actually living it is really powerful. So let's get into some steps right now, because you and I need the grounding in order to shift your mindset, because people are going to give you doubt. You're starting your new company. You may talk to somebody and they may say, hey, Joel, why are you doing this? Like, you could have been working for a company and making double or triple or 10 times this amount. Why are you doing this? Do you really understand the risks here? You're going to get doubt. So you have to have a really strong grounding and foundation to have faith in your dreams, to doubt the doubt, hashtag doubt the doubt. So first step is to identify your BS. That's not the other BS, it's belief systems. So I recommend you guys to pause right now and write down. I have space here, but you have a pad. Hopefully you have a pen and pad next to you to write down some beliefs you currently have about money, about prosperity, and think about how these beliefs may be limiting you. Are you thinking big enough? Do you know that your business can create financial freedom for you quickly? What were you taught maybe about money growing up that may be limiting you from truly having faith in your dreams and desires? So I would take a pause right here and take a minute and just write down a few items that you believe about money and prosperity and financial freedom that may be limiting you. And then, why do you believe this? Think about where this came from. It's not absolutely necessary to know, but it could be helpful if you think about why you believe this. I grew up and my dad won the award for the best worrywart in the world. He was a champion worrier. So I learned really well about how to worry. And I tell my clients now that worry is negative future planning. You're thinking about what you don't want to happen. So why not think about what you do want to happen? Again, worry is negative future planning. So have faith in those dreams and desires. Now, the next step is to choose empowering beliefs. Create a list of beliefs that you want to possess. And they don't have to be beliefs that you now have about your company. Maybe you have some doubts about getting to be a certain size in revenues and sales or a certain amount in earnings. But create a list of empowering beliefs that you want to possess. So they just need to be beliefs that you would like to cultivate going forward. So again, I'd recommend pausing here and literally writing down on your pad empowering beliefs about your business. Ones that will help you to get you to where you want to be in the future. Now, step 3 is to claim and own your new beliefs. So start thinking about, talking about, and acting on these new beliefs. So as I mentioned earlier in my startup story, I focused on these new beliefs by acting as if I already had the money. So what can you do today to act as if your business is much bigger? Now, I'm not saying get into massive negative cash flow. We'll talk about where's my cash going in a few minutes. But there are things you can do, right? Maybe in your business, you know in the future you're going to be traveling internationally. You're based in Paris, and you know you're going to be meeting some clients in New York, in Sao Paulo, maybe LA. So what you can do to act as if today, go online and research flights, research the hotels you're going to stay at, write down how much it's going to cost, look at the times, when the flights are going, when would you arrive, how you're going to get to your hotel. Think, okay, am I going to take a limo? Am I going to take Uber or Lyft? How am I going to get there? Am I just going to take a taxi? Maybe I'm going to rent a car. You can research that. So what kinds of things can you do today to act as if your business is already at that certain level without actually spending massive amounts of money, but taking small baby steps to focus as if these beliefs are already true? So take a few minutes and claim and own your new beliefs. So what actions can you take to reflect these new beliefs? So why is there a sugar pie here? So sugar pie is the acronym for the 7 money personality types. And I do have a really simple way that you can decide which money personality types you are. You can email me at joel@SaLaurmor.com. I'll send you the spreadsheet. It'll take you no more than 10 minutes. You go through and it'll tell you what money personality type you mostly are. Now, for sure, no one's 100% any one money personality type. Everyone's a blend. So anyway, sugar pie is an acronym. And S stands for splurgers, U for the unconscious ones, G for the greedy ones, A for the accumulators or savers, P for the protectionists, I for the investors, and E for the egotists. So let's go through each one individually. And these are some of the attributes. Now you may say, okay, that's definitely me. But again, you're part of each one of these. And there may be times that you're a splurger, and there may be times when you're a saver. So if you do the survey, it'll show you which one you're most prevalent and maybe the next 2 or 3. So I'll tell you which ones I am at the end of this, but maybe you guys can guess. It might be a fun game for you guys to guess what's my number 1, what's my number 2. And I'll tell you at the end here. So S is for splurgers. And splurgers generally are swayed by emotional or involuntary impulses. Their mindset, I deserve to spend my hard-earned money. And their attitude is, well, money grows on trees anyway. There's more coming in all the time, which could be true. And the example is if they're walking by, some shop, they're going to buy that dress, or they have to have that new guitar. They have to get those new King Cobra golf clubs. It's an emotional thing, right? It's emotionally based decision. Now, here's the surprise. I'm going to give you a surprise for each one of these. And for splurgers, I actually teach my clients to splurge once a month. It's not a bad thing. It actually creates the acting as if that you have plenty. So every month, I'm not saying go negative cash flow in your business to do this, but you could do something that really makes you happy or makes you more grateful. So happiness, by the way, is rule number 3 of the 9 money rules. Being grateful is rule number 5. So when you're doing these acts that create the same attributes as millionaires, you become more like a millionaire. So splurge. Now, what I recommend to my clients is to do something that really makes you feel abundant. So say you are going to work by taking the train every day. Maybe you splurge. Your splurge for next month is to take the limo to work. How abundant would that make you feel? Now, I'm not saying, again, go into negative cash flow, but maybe instead of buying the latte every day, at your favorite coffee or tea shop, you save that $5 or €5, and at the end of the month, you have enough so that you could actually take the limo. The unconscious ones. This is rare for a CEO of a business, but it does happen. And I have a friend who actually has her own business, and she has no idea. She actually said to me recently, the only reason why I have QuickBooks is because my husband set it up for me. So, and look, I know some people who just don't want to know. They unconscious ones really refuse to believe. They are sacrificing one's wants and needs. They don't realize where their cash flow is at. They believe they can afford anything. Now, here's the surprise for the unconscious ones. If you're looking at your business account where the money is, and there's very little there, and every time you look, you feel pain or really upset or sad, stop looking every day. It's not helpful. That emotion is not making you feel more abundant and prosperous. And I teach about emotions also. And the highest emotion is joy and happiness and ecstasy and passion and gratitude and appreciation. All those are the highest vibration. So if you're looking at your account every day and it's painful, it's making you sad and depressed, stop looking every day. I'm not saying don't ever look, but you could go days or weeks without looking and be unconscious deliberately. The greedy ones. So the greedy ones tend to have an excessive desire, especially for wealth or possessions. What's mine is mine, what's yours is mine. Okay, here's the surprise with the greedy ones. I will tell you that sometimes greed is good. If you have a really strong desire for something, you have to have a strong desire for your business to succeed. Some people teach balance. Rule number 9 in my 9 running rules is don't diversify. You want to put all your eggs in one basket, but watch that basket closely. It's a famous quote from a couple hundred years ago. Not quite maybe 150 years ago. Andrew Carnegie said it. He was the richest man in the United States in the early 1900s. So focusing on your business and having a massive desire is actually good. So greed can be good. The accumulators, also known as the savers or the hoarders, they're reluctant to give or spend. They're not generous. So they're all about savings and savings and saving. We can't afford that, So this is a mental attitude. We talked about beliefs in the beginning here. It's really important to have the belief that you got plenty to spare and share. If you're hoarding and accumulating, that may not be helpful. Now, people say, well, savings is good. But here's the surprise with the accumulators. If you're only saving, if you're hoarding this money, keeping it to yourself, you're not putting it out into the world. This is actually bad, okay? If you're not giving, which is rule number 6 in the 9 money rules, and I highly recommend giving at least a few percent of it, and especially in your business, if you have volatile earnings or volatile revenues, and it's really hard to plan your giving, every time you get a big amount, or maybe at the end of the month, you say, okay, I generated this month in revenues, this much in earnings, I'm going to give this percent no matter what, 5%, 10%, whatever it is. So just saving is actually bad. People say, oh, I'm a great saver. If you do your money personality type and you answer 90% of the personality, the attributes as savings, and that's to the detriment of everything else, that's not healthy. Protectionists. So Protection is protect their money, right? Being broke is not an option. But the attitude is don't touch my money, and the actions, they keep all their money in cash, right? They're not investing their money, they're protecting it. So again, this is not healthy. It's almost even to more of an extreme than the savers. Let's talk about investors. The mindset is I'm going to find an investment that I'll buy for 80 cents. It's actually worth $1. And right away, I'm up 25%. The attitude is, I can do this. I know I'm going to make money in this investment. So we talked about beliefs earlier. On a scale of 1 to 10, when 10 is absolute faith and 1 is massive doubt, they're usually 9s or 10s. And their actions is they don't want to miss out, right? Even when the asset is down or the asset class is down, they're looking at the opportunity. And E are egotists. So their mindset is they have the best plans. They're unconsciously overestimating or overemphasizing their skill set. So great to be an investor, but if you're saying, we're going to make money, you're doing no analysis, we're going to buy this investment, it's definitely going to make money, but there's no background to this, there's no due diligence, that's not helpful either. So egotists are not the best type either. So now, I know you guys guessed, I'll tell you my top 2 are investors and savers. That's my main 2 money personality types. So again, if you're interested in yours, you can fill out your own personalized form. I'll send it free as part of this course. Email me at joel@SaLaurmor.com. So let's talk about your business and cash. So again, this is chapter 7 in the 9 money rules. It's really important to understand where your cash is going. I know budget sometimes gets it's like a 4-letter word, but it's really important to understand where your cash is going and not be the unconscious one. So hire the accountant if you don't want to do it, but it's really simple. This first step, again, if you want to get a simple spreadsheet for a budget, just email me. So the first step is to open up a spreadsheet, either it's Excel or a Google app, and put down all the different types of categories. And I actually did this. I'll show you an example in a few minutes of expenses for my business and various scenarios that I went through starting up my business. So here's an example of some typical expenses. And these are for, a coaching business, for a business where, you have service providers. You have website costs. I think everyone nowadays will have a website. Maybe you're traveling around, food, gas, advertising. You have legal expenses and so on. So these are just a few samples of some types of expenses, but you know your business. So write down everything you spend one day on the business. Write down everything. Even if it's like purchasing coffee or a tea on the way to work, write it down. Write down if you're taking the taxi or the Uber from one meeting to another. Write it all down and see. This will give you a starting point. You can do this for 1 day or 5 days or a week, and it'll give you a sense as to where there's actually unexpected expenses. One of my clients, an individual client, was very surprised how much she was spending on chocolate every day, chocolate. So you don't know. It's good to write it down that way you're not unconscious. So the next step is to fill in your monthly income. And I know it may be difficult when you're entrepreneur and you have individual clients or business clients and it's going up and down, but try to estimate. Maybe you do this for 1, 2, or 3 months and you get a sense as to what the monthly average is. So I do this for my business. I try to predict what the quarter is going to look like. And this also gets back to rule number 4, visualization, right? You want to have a visualization of where you want to get to. I don't like to put time frames on things, deadlines. You know, it's nice to have calendar year or multiple year plans, but I tend to stress when I say, okay, I got to have this much revenues or this much earnings by this date. It's better to put it out there a little bit undefined, and you're not, and this is contradictory, I think, to most people who do goal setting. Got to put a time on it. But for me personally, it's better to put it open-ended. So you got your monthly income, you subtract your expenses from the monthly income. That's your monthly net cash flow. If it's positive, great. If you're a startup, it's very rare. You'll see in my scenarios, in the first few months, usually the business is negative cash flow, and maybe sometimes it's even a year. So how to plan for that. So if it is negative, you know, we'll talk about that and how you can fund that. Now, the other thing I highly recommend doing is making money a game. And I do this with individual clients. And I have a group coaching session on Thursday nights, and it's been pretty amazing. So the budget game is, again, this is a different spreadsheet, and you're only focusing on expenses where they have a monthly balance. I would do everything. So here you see all the expenses for typical business in the US, but it focuses on those with outstanding balances. So the office space, you know, you have committed to a lease that has a balance on it. Or if you took out a loan for your business, you see the American Express loan there. Maybe you took out some personal loans for your business that have a balance of $10,000. You're paying $150 a month. Now, the other things you're doing each month, but you're paying those off. So what you're focusing on here is to eliminate any quote unquote debt or loans that you have outstanding as quick as possible. So I recommend at the top of the spreadsheet, and we talk about this in my book, it is my desire to keep my promise regarding all of these financial obligations. And in some cases, I will even do twice as much as required. And what you do is you put across the rows all the amounts from highest to lowest, and you focus on the one that's the lowest outstanding, and you double it. Now, this may seem kind of weird because, wait a second, I have negative cash flow. How can I afford to pay that smallest amount twice? But what's going to happen is as you play this game and you get your bills coming in and you're actually going to the spreadsheet, it actually makes it more fun. And one of my clients who played this game in that group coaching, she actually generated 3 job offers within 2 weeks. So money just flows. You know, you'll get new clients. Things will just flow when you're playing a game. You're making it more fun and light and easygoing rather than, oh my God, I gotta get one more new client this month. So let's talk about the business plan. We've talked a little bit about it already. The first step when you start your company is to have some goals. What are your financial goals for the revenues, for earnings, for the equity of the company? Where do you want the value of the company to be over a certain time? Here is where, you know, playing the budget game really makes it fun. It makes it easy. You do this for expenses. You'll do it to determine what your monthly expenses are, your annual first year expenses. And what I recommend my clients do is, okay, let's worst case, no sales. First year, no sales. What are my expenses going to be? Now, there may be some expenses that are dependent on sales, like commissions and revenue sharing agreements, but let's do the worst case. Assume there's no sales. What would your expenses be? That's your first year investment. It's maybe on your shoulders, or maybe like when I started my hedge fund, I went out to people who were going to give me money to manage. And I said, as part of this, I'll give you a revenue share in my business. Okay. And we'll talk a little bit more about revenue sharing and investing in the business in a second. But if you do that, then of course a percentage of your earnings is going to the investor. But again, let's assume there's no sales. What's your maximum first year investment? And how are you going to fund that? Is it just you doing it? Or maybe can you take out a loan? Maybe you've had a prior business. And so the bank will say, okay, you've been profitable in your prior business. We can look to that. Maybe they see, they will look to your personal assets if you're just starting up and say, okay, we'll lend on that. Now, importantly, you really need to understand yourself. So that's why we went through the money personality types. What are your strengths and weaknesses? If you're starting this company, you are the company. You're creating the culture of the company. You are the strengths and weaknesses. But you also have to think about the opportunity set for your type of business. Who's the competition? Where are you potentially having a massive opportunity compared to your competitors? And then think about the threats, right? There could be somebody else who is also looking at the same type of business, right? So think about that. And then how much do you need to invest? So again, use the budget game and think about your total expenses. And can you fund them based on your own assets, based on your money, or do you have to use other people's money, OPM? So let's talk about paying yourself first. So I recommend, and I did this for each of my businesses, that you pay yourself a draw or a salary as part of the business expenses, even before you're at scale, meaning before your cash flow is positive. So you're used to paying yourself first, right? That's really important. And I think most people don't do this. They don't do it in their personal life, right? They think, okay, bill collector, that's most important. But actually, that's not most important. You're the most important person. Your company is the most important. So you pay yourself first, and then you pay out the bills. Now, there's going to be unexpected items. You can't plan for every specific scenario. So what I recommend in your scenario analysis, which we'll get into in a second, is adding some percent of the overall expenses for other items that you can plan for. Something's going to come up. It may be over the year, but I would allocate it over each of the 12 months for the year. So that's really important to plan for some unexpected items. Now, let's talk about business growth. So I'm gonna show you some slides in a second, but it's really important to talk to other people in your business. You're in a coaching business, or you're in a money management business, or you're in a retail business. Go out to others in your space and talk to them and see what they've learned. Don't be shy. Ask the questions. I have a friend of mine who's doing like leadership, she's actually looking at leaders and talking to them. So that's really important. And the other thing that's really important is to think about the value chain, right? So if you have a particular business, do you have different types of products across the whole value chain? When I first started, I had the one-on-one coaching. So high value product, which has a very high return for both the client and for me. But what about if somebody is not quite there yet and can't afford that high value product? So think about other types of products along the value chain. And so one of the reasons why I wrote a book, I have video programs, I have coaching programs with joint ventures that are not taking up as much of my time, that are lower cost. So there's different points along the value chain. So consider that as you develop your business. Don't just go for the high end product, but have lower end products as well. And of course, I give everybody 30 minutes free coaching as well. Now, balance sheet is really important to think about. Eventually, you're going to be generating value for the company. Your cash is really important. Cash is king. So it's really important to project out what the balance sheet is going to look like, what the assets are, what your debt is, what the equity is in the company. Set some goals, and then see where you are after a few months, and then revise it. And this is a continued, like, it's an iterative process. So profit and loss, again, what if there are various things that don't happen? We have uncertainty in the current environment in 2020. What if your goals aren't met? When do you decide that you need to exit? And I think this is really an individual decision, because each person has different levels of belief and different levels of amounts that they can lean on others for, either business loans or personal loans. So I like to do various scenarios. So let me just skip here to scenario analysis, and then we'll go back to business investments. So what I like to do is look at different scenarios. So here I project out 3 different scenarios for the next 3 years. And I show a bull case. I'm all about the stock market. So bull is good, high end, base is the base case where you're planning to, and then the bear case is the negative. And so I do this before I start my business. I say, okay, what's the upside in terms of revenues? What's the expenses that I expect to have? And what are the earnings of the company under these various scenarios? And then, of course, we talked about paying ourselves first. What's the salary? How much are you going to pull out under different scenarios? So obviously, if things aren't going as well, you're taking less salary out. And as you see in the worst case scenario, the bear case, you're barely making any money. So again, let's talk about loans or business investment. So you have to decide how much money you need. And we show here earlier, if I go back to the slide on expenses. So if you have a bear case where you have very low revenues, you see here it's 290 to 400,000 in revenues in the low case. Those expenses that you see there are almost constant. So you got to think about, okay, how am I going to fund $270,000 in expenses, or 260, or in 2020? So that's the amount you'd have to fund no matter what, even if sales are very low, revenues are very low. So the question is it dollar for dollar? Can you borrow a certain amount of money and actually lever that amount? So here, this shows in these scenarios, you wouldn't have to borrow very much money. But in the bear case, I put in a 10% equity percentage, which means that you gave up 10% of the company to an investor in order to get through the next 3 years. So what happens there is, if you go back to this slide, you see they're going to be taking 10% of those earnings each year and in the future as well. So they're getting $1,800 and $4,700 and $3,400. And then going forward, they're getting 10%. and they own 10% of the company as well. So just to go back to the business investments, using other people's money, you have to decide, should I borrow or should I find an equity partner? Now, one of the things to consider is, what's the rate? What's the interest rate I have to borrow at? And if you're starting up, usually the interest rate to borrow can be quite high. In a very low interest rate environment today, it could be as high as 10%, even though interest rates around the globe are around 0 or 1%. So it might cost a lot of money to borrow, but if you find an equity partner, the implicit interest rate in that equity partnership may actually be lower than 10%. So consider the various costs. The equity partnership, of course, they own 10% or whatever the percentage is forever. So there's, you can also consider how that makes you feel. The investor, if you're borrowing, you owe the debt on that for a specific period of time. It might be 5 years or 10 years. With the equity partner, it's forever, unless you have a clause that, at the end of X number of years, they're out. But generally, the equity partner wants to be in for forever. And BOD is board of directors. Generally, the equity partners want to be on your board. So they'll be a part of the decision-making of the company. And, if you have, say, 5 board seats, they may want, 1 or 2 board seats. So 40% of the board may be represented by that equity partner. And it depends how much they've invested. If they've invested close to 50% of the company, they may want the majority of the board seats. So that's really important to consider. When you're borrowing, the lender is not asking for any board seats. So I'm going to open it up to questions in a second, but I did want to remind everyone about the bonuses. So again, email me if you want the budget game spreadsheet, if you want to figure out your money personality type. I also have, when we started, we talked about beliefs. It's really important to get your belief level up. And I have free audio files on my website. I have money affirmations, and also anybody who's watching today, get a 30-minute prosperity coaching masterclass from me as well. So at this point, I'll open it up to questions. Thank you.